Private equity fund, when you think about the investment strategy, I compare that to venture capital, which isn't necessarily thinking about the exits like a private equity fund would. With this new growth equity fund, as you're jumping into some of these growthy tech unicorns, what are you all thinking about that's different given your focus on the exit?
Yeah, it's a great question, Alex. So I think one of the things that's really interesting now is companies are just staying private a lot longer than they have historically. If you look back over time, companies tend to stay private for 6 or 7 years on average, and today that number is 11 years. And so these companies need a different type of investor to help guide them through that process. We think a lot of the skills and capabilities that we've built up as a firm over the past 40 plus years can really help these companies get to a size and a scale and maturity where they can either become a viable IPO candidate or become a valuable asset for a strategic acquirer as well. One
of the recent investments is Lyft. I'm curious, Lyft is the smaller of the two US-based rideshare companies. Why Lyft? Why not Uber?
It's a great question. Lyft is a business that we've known for a long time. We respect John and Logan, the two founders, incredibly. They've assembled an amazing team. They've built a great company. We've looked at investing in the business a number of different times. Every time we checked in with them, we were really impressed with the progress that they had made, but there was always something that kept us from investing in the company. Early on, that was regulatory risk or questions around whether ride sharing would really be adopted on a mass basis. Later, it was questions around, can they get to attractive unit economics? Can they control cash burn? When John called us, back in late 2016 and said that they were contemplating a capital raise, because we had built a relationship with him and because we knew the company so well, we knew exactly what to look for. And obviously, we liked what we saw because we ended up investing with the company.
Vinny, it's Emily in San Francisco. Do you think companies like Lyft's competitor Uber and Airbnb are making a mistake by waiting so long to go public? We've seen Snap come out of the gate very quickly. It seems to have gone fine. Should these other companies be thinking about getting out the door?
Yeah, it's a great question. I really think the answer depends. It's really company specific. I think being a public company really exposes you to sort of the market overall and helps you become really disciplined and understand where you need to focus. One of the things about being private is, you can be a little bit more loose in some of the ways that you look at your business. You may not get feedback directly on how the business is performing. In the public markets, you get feedback every single day on how you're doing, the areas that people are concerned about, and I think that can be a really valuable thing for the right companies open to that type of feedback as they grow.
You have this $700 million plus of new dry powder here. Where are you looking within the tech space to put that to work? Are there certain industries that are more attractive for you right now?
Yeah, we try to be very thematic in the ways that we invest, and so our team today is focused on a handful of areas that we're looking at for investments, and those would include things around enterprise software, cybersecurity, IT automation, and application development. And then on the media side, we're spending a lot of time in digital media in particular, and then consumer internet, particularly around consumer marketplaces. Lyft would be an example of that would fall into that latter category.
KKR does have a great capital markets team. We do see them help take out companies. Lyft, are they an exit candidate via IPO? Do we see them publicly traded one day?
Yeah, it's a good question. And I think we have companies at different maturity levels within the portfolio, and when they're candidates, when they're of that size and scale of maturity, where they can start thinking about a public offering, I think having an in-house capital markets team that has an alignment of interest with the company is just a really valuable and differentiated resource. I think Lyft's at an interesting stage itself where it can start contemplating, are there advantages to being out in the public market, both for the company itself and then for the industry overall vis-a-vis the competition.
So maybe we see a Lyft IPO one day with the help of KKR Capital Markets. Emily.